Hi everyone, how are we doing? So this is a monthly portfolio update for October. So I have here two graphs, which is going to be the sort of basis of these updates. So we've got the portfolio value here on the left and the dividend on the right. So we can see we just crossed over to $8,000 this month, and it's subsequently fallen since the market has gone down. However, I feel confident in the purchases I've made this month. The dividend, so it started at around 50 cent. It rose to nearly $12 last month. We're currently about $5.9 for October, with one more dividend coming in on the 30th. So this is just a quick run through of the graphs showing how the portfolio has been performing. So moving on to simply Wallstreet here, which is what I use to sort of track my portfolio. We can see the largest holdings in market value here. The main purchasing I've done recently is through Legal & General, and part of that is because of the great valuation of this company. So if we look here at the so rather than trying to do just technical analysis, I try and do sort of more business fundamentals. But we can see here the price is currently quite attractive. The valuation given based on the free cash flow of the business is 58.7% undervalued, given that great margin of safety. The future growth is very good. So we see with this business it's quite cyclical, meaning you can see the cycles here, which are normally quite predictable, and they have forecasted a large increase. I don't really like to go off this too much. I don't know how they've analysed it, but it's good to see as a basis for making a decision. We can see here there are such a large amount of cash in this business. So they've currently got 21 billion, an increase with a debt to equity of only 62%. And what really attracted me is the dividend. So there's a current dividend of 9.46, and it is only forecasted to carry on growing given the current price and the commitment to grow the dividend year on year. We can see some large insider trading as well, which is always a good sign, showing that the people inside the business are keen to buy it, and also gives them more incentive to carry on doing a better job. One of the reasons as well that I like Legal & General is they have such a large portfolio of investments. So LGIM, which is Legal General Investment Management, is a division within the company. So this is some of their holdings here. So they own the largest stake in their largest stake, is 9.6 billion in Apple, 9.3 in Microsoft, Amazon, Facebook, Alibaba, Google, Johnson & Johnson, Visa, Procter & Gamble, and Berkshire. So when you look at on simply Wallstreet here, you can see the sort of largest holdings of each company and who owns them. So if we take Apple, for example, or Amazon, which is one of the largest companies, is always good to see. So we've got Legal & General here. So they own 0.5% of Amazon, which doesn't sound like a lot, but that's 8.1 billion. So I think they've got such a resilient portfolio of holdings that it makes them very attractive at the current price. Another company I've been looking to buy more of is Aviva. So this company also is an insurance company in the UK, and they again have a large portfolio of holdings. So we've got Microsoft, Apple, Amazon, Google, Visa, Alibaba, all those sort of large tech companies they own holdings in. And also through reading their report, they're very committed to increasing the value of their business. So it's one to hold. It's not the largest holding I've got, Aviva. I'm looking at seeing how it goes, checking the current price, and continuously reading their quarterly reports to try and get updated. One of the major shares I sold this month is Rolls-Royce. So last month I talked quite in depth about how well priced it was, but since then the news about the rights offering has come out. So we can see here the rights offering was initialized on the 27th, so we had a drop from £22.20 down to 75p, and it's currently peaking at 94p. I'm going to stay out of it right now because I don't actually understand what's happening with this. All I understood was that the shares were getting heavily diluted by about 77%. I will bring up my post here about this. So here we go. So the shares got diluted by 77% of existing shares. So they increased the amount of shares being floated on the market by 333%. They did this because their free cash flow was down of minus 2.8 billion. The offering to buy the shares is in November. So this ordeal is not over yet, so there's still a lot of uncertainty around what's happening. And also whether this can actually save the company, because I think it was due to raise about 1 billion. But obviously given their negative free cash flow of 2.8 billion, I don't know how this will pan out. I think this is in addition to not selling ITP Aero, which is a division in Spain. But we'll have to see. I've got a number of people who I know working at Rolls-Royce and they're still on furlough, so it's interesting to see what's happening. So moving on to the portfolio here, so we've got 7.7k. We've got a negative profit of $195. I like to show the ups and the downs. It's not all just wins. You have to take the market volatility. So the largest holdings are RTX, which is down 7.7%, and LGen, which is down 3.4%. But I'm confident in these. I think RTX has seen a lot of institutional purchasing recently, which just sort of helps to reaffirm my decision to purchase this company. So we can see here every large institution has increased their holdings in this. This might have to do with tensions with China, the sales to Taiwan. From reading their report, there's about 80 billion in backlog of orders, which is very strong. So this is the history from this last month. So I managed to sell my shares at Rolls-Royce for a profit of around $30. So we had one there that we lost 34, but overall I purchased at 148, sold at 221. So I just disposed of them because I knew that this dilution was going to occur, which was a good decision. Some of the deposits I made this month, and I sold my $50 worth of Unity. I just want to sort of try and concentrate my holdings. I believe that this is just incredibly overpriced right now. So when the companies IPO, they're often looking to give an overvalued price. Why would you IPO at a price under when you're saying to public you want to raise as much money as you can? This company also doesn't have positive earnings. I think it's very typical of a software company right now. So they're not projected to have free cash flow positive until 2024, and they haven't in the last couple of years. They do, however, have a very low debt to equity, only increasing their debt in the last couple of months, with a high cash position, which is good to see. However, I'm just staying clear at the moment. I feel like given the near 250% increase since the IPO, that it's just not a good time to purchase. It's sort of a lot of hype and I expect it to come down. It's a company I look to buy potentially in the future. They have a great market position and a lot of future growth potential. So that's it for this month. If you have any questions, please let me know. I'll do this again next month. I'm aiming to bring out some more videos analysing companies, some of which are the UK banks. I feel like the UK banks might be a good purchase. I want to try and understand what each bank offers, the current price, and they also provide attractive dividend yields at the moment, so it'll be interesting to see. So thank you for watching. If you have any questions, let me know. Cheers.